This message is a warning about the huge financial bubble we face today. Many believe this bubble is even larger than the one in 2008. Everything, from stocks and bonds to credit, is affected. In simple terms, we are living through a dangerous time where almost every part of our financial system is at risk of crashing. Please like and subscribe if you enjoy these clear explanations. Imagine a football stadium that slowly fills with water drop by drop. At first, only a little water collects in the field, but soon, each drop makes the water level rise faster. Before you know it, the entire field is underwater. By the time the people in the stands realize what is happening, it is too late to save the field. In our economy, the problem grows at an exponential rate. By the time we notice that debt and other issues are out of control, our choices become limited. At that moment, we can only manage the crisis rather than prevent it. Our current situation is not accidental. For many years, we have borrowed too much money. This borrowing has pulled future prosperity into the present. We have been using money printing and other short-term fixes to cover up the mounting debts. In doing so, we have delayed the inevitable. The debt we have built up now seems to be reaching a point where it cannot be sustained any longer. The big question is whether we will face a default on our obligations or if the government will try to fix things by printing even more money. If we choose the second option, we may end up with a very weak currency and runaway inflation. Many experts believe that when a country prints too much money, the value of its currency falls and people lose what they have saved. In the end, it is not a choice between a gentle adjustment and a sudden collapse. It is a race toward a financial disaster. One advantage of growing older is that we have seen history repeat itself. We have witnessed past bubbles, crashes, and recoveries. With experience comes the understanding that the problems we face today are similar to those in the past, even if they come in new form. Some older investors recall the days when small drops of water turned into a flood. They now see the writing on the wall as the situation worsens and the financial field continues to fill with water. This warning is not only about the huge bubble itself, but also about the way people invest their money. Many young people today are giving financial advice on the internet, despite never having seen a major crash. They often follow what the government and central banks tell them to do, without questioning whether those instructions make sense. Their advice is based on a period of long, steady growth, and they do not fully understand the risks that come with it. I have built my own success by taking a different path. In 2011, when the market was on the rise, I made my biggest fortunes by investing wisely during a time of crisis. I backed mortgage securities and bought quality real estate, even borrowing large sums to do so. I learned that the secret to success was not to follow the crowd, but to be aware of what has happened before and to plan for the future. Now I see many young people who have grown up in the long bull market, and they are unprepared for what is coming. There is also a big problem with the advice we receive from institutions. For example, many say, "Do not fight the Fed. Do as the Fed tells you." But can the Fed really print everything we need? They can print money, but they cannot print essential goods such as oil, gas, or food. This is a big mistake. The Fed's policies may help the market in the short term, but they do not solve the underlying problem. When inflation is created by too much money printing, the value of everything falls. This means that even if you have money saved, its purchasing power decreases, leaving you poorer in real terms. History shows there's never a soft landing in a market crash. It happens suddenly with little warning. The best strategy is to plan ahead. Be careful with money and manage debt wisely. Debt can help build wealth, but too much debt is dangerous because you must pay it back with interest. I have used debt to grow my investments, especially in real estate. For example, I bought many apartment buildings. When interest rates were low, the value of these properties went up, and I was able to refinance them. Refinancing allowed me to access the money locked in my investments without selling them, and triggering a large tax bill. In simple terms, I used other people's money that came with tax breaks, to make my investments work for me. This method has worked well for me over the years, even though it is not the path most people choose. Some people believe in investing in digital currencies like Bitcoin. While I do own a small amount, I do not trust digital currencies as much as I trust hard assets like gold or real estate. Bitcoin, for example, is very small compared to major companies, and its value can change very quickly. Governments can also control or tax digital currencies, which reduces the freedom that people expect. For these reasons, it is wise to keep only a small portion of your investments in such currencies and focus more on proven assets. Our school system often teaches money lessons that don't match real life. We learn to get a good job, pay taxes, save money, and invest in diversified portfolios. But history shows that blindly following this advice can lead to disaster. Thinking for yourself and questioning what you're taught is key to protecting yourself during a crisis. One story I like to share is about a time with billionaire friends. We wondered if a crash was coming, and one day, after studying the numbers, We went to a restaurant filled with people in fancy evening gown. I looked at my friend and said, "The crash is coming." We call this the evening gown theory of economics. It means that just before a crash, people seem overly happy, as if celebrating. But then, suddenly, everything falls apart. This is a sign that the bubble is about to burst, and only those who are prepared will survive. Markets always rise and fall. Right now, we seem to be heading toward a depression, with slow growth, job losses, and dropping incomes. Governments might print more money to cover debts, but when the debt to GDP ratio becomes too high, it's like borrowing until you can't afford basic needs. Today, our debt levels are far beyond what's safe, putting our country in serious trouble. I've seen these issues for years and learned that debt, if used wisely, can build wealth, but relying too much on debt is risky. I use debt to invest in assets that produce steady cash flow, so even when interest rates change or markets fall, I still earn money. This strategy has helped me weather financial storm, though it requires a deep understanding of money and strict discipline in managing debt. One thing I've learned is that the best ideas aren't always popular. The smartest ideas come from questioning what we're taught, not just following government, bank, or media advice. History shows that blindly following the crowd can lead to disaster. Studying the past helps us prepare better for the future. In my life, I've used debt to invest in real estate, oil, and gold. I've bought apartment buildings, refinanced them, and use the cash flow to buy more properties. I also invest in oil wells for their tax breaks and in gold as a safe store of value when currencies lose worth. These investments have helped me build wealth despite many challenges. There is no quick fix to our problem. Years of borrowing, money printing, and bad policies have created a huge bubble. When it bursts, it won't be a slow fade. It will be a sudden, painful crash affecting everyone. The key is to be prepared. Learn, question what you hear, and study history. Don't blindly follow advice from those who have never seen a real crisis. I've seen many financial ups and downs over the years. True wealth comes from hard assets and smart planning, not just following what everyone else does. Sometimes you have to think for yourself, learn from the past, understand today's challenges, and plan for tomorrow. The current system is flawed and change is coming, whether we are ready or not. Remember, the ideas in your head are both your best asset and your biggest risk. Think carefully and don't let others push you into decisions that don't fit your situation. The future is uncertain, but staying informed and making smart choices can help protect you from the worst of the storm. Markets always rise and fall. History shows that every big boom is followed by a bust. Recognize the signs, prepare for what's coming, and don't be swayed by empty promises. Learn how to manage debt, invest in safe assets, and always question popular opinion. This advice isn't just for investors, it's for anyone who wants to keep their finances secure in tough times. Stay informed, be cautious, and plan for the long term. Please like and subscribe for more videos. Together, we can work toward a safer, more stable future.